Today was quite an interesting day for markets. We were down most of the day, but closed largely in the green, albeit slightly. However, I'm noticing some things deeper in the market that are giving me some more things to think about and some more moves to make. And I made some moves today. The first thing I'm seeing is meme stocks. And if you go to the videos when the first day this rally started, we weren't surprised we got a little bit of a rally. The two videos before, we said, be greedy when others are fearful. It's time to start adding positions. Then when we had that strong move, when the Fed came out, we said, okay, this makes sense. A lot of the downside news around the Fed was highly anticipated, and they didn't really give us any sort of major surprise. Nothing too nothing too much from left field. No major curveballs, really. We're just getting hikes, and they're going to be measured, data dependent, etc. So we expected, okay, maybe we'll have 1, 2, 3 days of solid performance as people realize that, calm down, and recover, and then we'll get into a little bit of a sideways market. However, I think that little bit of recovery has now extended quite significantly, and we're moving to quite significant heights. And I personally don't think we are going to new highs anytime soon. I think prices were too expensive at those highs. We now have great concerns about inflation, and it's unlikely earnings growth continues in a meaningful way. Revenues may go up, prices may go up, but costs are going to go up too. We saw that be okay in housing. Housing's coming down. So we're now seeing some downside movements. And I'm not forecasting a recession. I'm not getting too bearish about this. What I'm saying is the peak that we saw earlier this year, end of last year, was probably, in my opinion, the peak for the year. And we're simply moving at a very fast rate close to that. We're moving at an extreme quantitative easing rate to those levels. And I don't think that's warranted. Particularly, the things that I'm most concerned about are occurring in full force today. GameStop, AMC up like 30% or something. One of the moves I made today was I added a GameStop well out of the money, about a month away put position. Nothing big, it's not a huge position, about less than 1%. But I think in the next month, we'll see a little bit of reckoning with these kinds of things, because this is exactly what I don't think should be occurring. I don't think we should be having meme type moves. I think that is a mistake. I think that's a mistake. I would not be participating in those. And I would encourage those who are participating to realize their gains. And if you're not on the sidelines, do not be jealous of the moves. Do not have any FOMO, because we are in a quantitative tightening environment. We are in an inflationary environment. We are in a rising rate environment, et cetera, et cetera, et cetera. Possibly slower earnings growth. So I think we have to be cautious, avoid the meme type moves, and be wary that we've had a tremendously strong run the past couple days. And there's no reason for us to be at all-time highs. There's no reason for us to be at all-time highs. We're approaching those levels, and very quickly. So we've laid out a number of reasons why that's the case. Let's be cautious here, is what I'm saying. I have a cash position, around 10% cash position. I'm happy with that. Going to keep that around for now. Conversely, I think the lows may be in, but I wouldn't be surprised if we get into that area, just if things get too extended. If GameStop gets too extended, get ready, because that is what prompts a real whacking. We're going to have to see what happens. There will be a vacuum if we continue to rise. There will be too much buying and people just buying. And the people who buy slightly lower are now more than slightly lower. And that creates a vacuum. And that's where we get a little bit of a difficult situation. So ultimately we're going to have to see what happens, but I'm not buying the meme stocks. I don't like seeing the meme stocks, and I don't like seeing the market moving and the meme stock this high and the meme stocks coming back. Okay, I don't like that. Just be wary. Something that is taking a hit that we do focus on quite a lot is energy stocks. I'm taking some off the table here, but I'm very much still bullish on these stocks. And I'm not necessarily buying the short-term pain that we're seeing today on the China lockdowns. This is the fourth city to be locked down, Shanghai. We had several before, like last week and the week before. Market didn't do anything. I think there's just a little bit of extra concern about, Russia charging rubles, etc. Shanghai locking down, probably not going to be that long. And the rest of China is likely still online. We know oil markets move on these kinds of things quite significantly, and they haven't proved to be, impactful in the past year plus. So at least in the long run, yes, they do have short-term hits like this. Regularly happens. Same thing on the upside. We thought at 135 it was too much. We're taking some off the table. That clearly ended up being the right move. So if it keeps falling, good. I'm going to buy some more. If Schlumberger gets under 40, I'll buy some more. I did last time, about a week or two ago. Added a little bit after selling a good amount. Added some Exxon when it was back around 80. I think it was at $79 a share. I bought $80 calls. I'll do some speculation, some trading like that, in addition to my stock position, which I have trimmed and have added back to, actually, a little bit when it was down 70, 80. So, proper portfolio management. Let's focus on the fundamentals, forget the technicals, forget the moves, forget the momentum, forget the emotion. We can't get caught up in that. Right now, we have to be calm, collected, focused on the fundamentals, and if things get too extended, we have to take advantage of that and whack with sell orders. No new highs right now. Not in the broader market. So that's today's video. To be cautious, let's not get too concerned about energy. Let's stay calm, collected, properly portfolio managed in well-priced positions. And if we have those well-priced positions, we can continue to hold. But don't be afraid to add hedges as we rise to these levels. Don't be afraid to take a little bit off the table as we rise to these levels and have a little bit of a cash position. Just look at GameStop and AMC. This should not be happening, but it is. And for disclosure, AMC recently bought a silver mining company. I own quite a bit of options in that silver mining company. That's my exposure there. I don't have AMC, and I have, as I said earlier, GameStop puts. So I like silver. I like cheap silver companies. I'll buy them all day. If AMC happens to own them, yeah, I'll get involved in that trade. Small allocation, why not? I'm sure my clients would be okay with that, and they haven't raised concerns. So we're going to stick in that. It's up 80% today. I'm cool with that. I mean, it's a silver mining company. I'd rather see a silver mining company be up 80% than AMC be up 80%, especially one that was about to go bankrupt, trading for basically nothing. So that's today's video. And until next time, peace out.